After the common size financial statements, when everything is placed in percentage, we're going to move to our next subject, which is the creation of the statement of cash flows. As you can see right here, you have cash flows from operating activities, cash flows from investing activities, and from financing activities. And they all include several items underneath. And you're going to calculate the subtotal for all of them and then sum them up. Okay, remember I said earlier that when we calculate all the numbers in this given financial statement, we're going to plug in a number for cash equivalents. And that number is the cash in the previous year plus the overall change of a cash from last year, which is a negative 38. So if I hit enter, you will see the number is still 42 as expected. That's a correct number, but there has been a formula plugged in behind it. So that's going to be part of your grade for this submission. All right, so how do I create a statement of cash flows? So if you are serious about doing this, you should know that it does not give you this automatic format. So you have to start everything from scratch. So let me just insert another worksheet, all right? And I just call it statement of cash flows, and a little different in terms of number, in terms of name from here. So for this statement of cash flows, what I need to do here is I need to use the numbers from the balance sheet right here. And once again, I'm going to apply the same old trick. I'm going to use a new window, and then I'm going to arrange the both windows in a vertical order. All right, if for some reason you hit more than two windows, okay, like this, another window, and you just view them vertically, and they all show up like this, don't be panicked. Just close one window, and that's it. And then you just rearrange it in a vertical way. All right, so one spreadsheet I want to show the statement of cash flows, and another one I want to show the balance sheet. And once again, I'm going to close my picture here so you guys can see it better. Okay, so you need to observe all the items here. So you have accounts receivable, inventories, and these are all below cash. So you don't work on the cash here. As I showed you, it is the cash in this year is a cash in the previous year plus the net change of cash. So the rest of the items would make your cash to change. For example, I'm going to type in an item called a change of accounts receivable. All right, and that is the assets. You will see the account receivable increase from a 315 to 375. It increased by 60. And what's the net effect on your cash if you have more assets increased? So you're gonna have a deduction in your cash when you build more assets. And the increase of account receivable meaning that you are not collecting your bills. All right, you're not collecting your bills, so you would have a cash in short. So you would need to use the negative of the change. Okay, account receivable in the new year minus the previous year. All right, so that's a negative 60. Well, you may also see that I don't have to put out the parenthesis or negative sign. I can simply use the old year minus the new year, all right, which would give me the same result. Let me zoom in a little bit. So for assets, let me put this way. For assets, you're gonna use old minus new, and for liabilities and equities, you're gonna use a new minus old for the cash effect. All right, so let me just put these notes here as a guideline. Now we do the change of inventories. If we move it down, and it's the assets for sure, and I'm going to use the old minus new. Since inventory increased by 200 from a 415 to 615, my cash would be reduced by 200 because I spent that much of cash to purchase more inventory. The next item here is the total current assets, which include the items above. So I'm not going to count that. If I count it, that's going to be wrong. That's called a double counting. All right. The next one would be change of plant and equipment. Just say equipment to be short. So this is assets, and once again, I'm going to use a new minus old reversed, okay, which is old minus new. Sorry about that. All right. And you also have a change of accumulated depreciation. Well, this item here is a negative asset. Remember, accumulated depreciation is negative assets which has to be deducted from your total value of plant and equipment. So if it is negative assets, then this rule would be adjusted a little bit. You're going to put another negative sign in front of it to make it a new minus old expression. So what I do here is I'm going to use a new minus old. So because of more depreciation there, I actually saved some cash. That's how we do it. And therefore, it's not just liabilities and equity use the new minus old format, and also for accumulated depreciation. Just put here. And then if I keep moving, I have a net fixed assets, which is a summation of these two. And once again, I don't do sums. And total assets is another summation. I don't do it. Then I move down to the capital side of the balance sheet, and I see accounts receivable, actually accounts payable here. And since it's a liability, I'm going to use new minus old. 60 minus 30. I have more payable. I have more unpaid bills. So that basically means I'm not paying them in cash. That helped me save my cash. The next one is a change of accruals, which is unpaid rent, utilities, and the bills. And it is also taking the format of a new minus old. So it increased by 10. So that means I saved some cash somehow by not paying the bills. And the next one is the notes payable, change of notes payable. And that's a liability. And again, it is new minus old. You will see that my notes payable increased from 60 to 110, meaning I have issued more money. I have borrowed more money. So that means I have more cash due to the borrowing. And then I have a total current liabilities, which is a sum. I don't worry about it. And the next one is a long-term bonds. So change of long-term bonds. And again, is new minus old. I have raised more money, so I have more cash in my pocket. That's nice. And the next one is total liabilities, which is another sum. I don't work on it. And also, if I move down, I will see common stock, change of common stocks. It changed from 130 to 150, increased by 20. So that means I collect another $20 million of cash by issuing more of my stock shares. And the rest will be change of retained earnings. That's a liability, that's an equity. So it is new minus old. Okay, so these are all the items excluding cash on the statement of cash flows. If I sum them up for their changes, you can see that it's going to be equal to negative 38, which is exactly the change of cash from last year to this year. You see, from 80 to 42, the change is negative 38. It reduced by 38. Why your cash got reduced by 38? All because of these activities. All right. However, that's not the finalized format of it. I'm going to do some editing job here. For example, I need to make sure to mark them where they belong. Close the window and then put the full screen. If you see right here, you have three categories. You have cash flows from investing activities, financing activities, and here operating activities. So for account payable or receivable, these are all operating activities. Inventory, operating activities. Plant and equipment is different. That's investing activity. Okay, so you spend a lot of money for capital budgeting plan, and you basically that means a huge investment from the company side. And accumulated depreciation is and also operating activity, payable operating activity, accruals operating activity. These are all related with the daily operations of the firm. Notes payable, that's something different. Notes is about issuing securities, so that's about financing activity. Finance. Long-term bond is also about issuing securities in the market, and common stock, of course, as finance activities. And retained earnings, this could be a little different. Remember, in the given spreadsheet, retained earnings equals to whatever it is last year plus net income minus total dividends. So the change of retained earnings from last year to this year is net income minus dividends. Okay, it's this part, net income minus dividend. That's the change of retained earnings. And on the statement of cash flows, we're not putting an item called a change retained earnings. Instead, we express it. Okay, we express change retained earnings into two items. One is income, net income, and another is dividend. All right, and net income is about operating activity. Dividend is about paying the shareholders for their securities investment, so that's financing activity. And instead of putting the number for the change of retained earnings from the balance sheet, I'm going to borrow the number from the income statement. All right, net income here. And for dividend, don't forget that's something you pay out. It's a negative number. Make it connected to the income statement for dividends. That's negative dividend. So the output should be negative 72. And right here, you also see the change of accumulated depreciation. That's a 100. Remember, when we calculate the accumulated depreciation for 2022, it equals to the same item in the previous year plus the depreciation expense this year, which means the change of retained earnings equals to the depreciation this year. So on the statement of cash flows, I'm going to replace the name with depreciation only. And instead of putting a subtraction formula, I just simply borrow the number from the income statement. Okay, if I sum them up, the number is still negative 38 as expected. All right, but we're not done with it. So we need to calculate the numbers, and then we need to sort them out. So for example, I'm going to hit my button here, right click, and then I'm going to cut this and then put it in a different area. So the investing activity is separated, and then right here, the net income, I want to cut it and put it on the top. All right, that's the operating activities. The depreciation here, I want to cut. I want to put on the top of it. Insert cut sales. So that's for net income plus depreciation. And for all the others, okay, hit the first one of the financing activities, then put a shift, okay, the shift button, then hit another one, then right click, cut. All right, and then I can just move it down here. Now we're talking. Now all these activities has been grouped into the right categories. All right, so you have cash flows from operating activities, and you also have cash flows from investing activities. I'm lazy, so I just do copy and paste and change some numbers. Then you also have cash flows from financing activities. Financing activities. All right, and I'm going to calculate all the subtotals, okay, which is a summation of the numbers in the same category. Okay, start with the equal sign, then sum standing for summation. All right, and then I'm going to get the grand total, which is the net change of cash, which is the summation of all with the three subtotals, 1 plus 2 plus 3. Okay, negative 38. And then the rest of your job would just be formatting. So we can just adjust the width of a column A. And also for the numbers, we want them to be in dollar figure, but show no decimals. And for the major ones, we want to mark them bold and put an underline here. Okay, underline here, and net change of a cash. Okay, and also you can just put some indent to make them look a little inferior to the subtotals. All right, so this is supposed to be your statement of cash flows for the year of 2022, which is the newest year. And you can just compare this one with the one I just created. And of course, there are some format issues in terms of a font, or you can also insert some blank rows here, okay, to make it look a little nicer. But it really does not matter that much. Okay, I can insert another row here, and I'm saying this is year 2022. Okay, now they look much the same. All right, and for this part, you see there's no formulas to put, and since I have already taught you how to do it from scratch, you can just delete, okay, delete this spreadsheet and use the numbers here we just created, okay, we just created. And for this cash, and you can see after I delete that, the reference cell in the reference spreadsheet, it changed to round reference. So I'm going to use the same number here, which is the cash of last year plus the net change of a cash in this year, which is from my newly created statement. All right, now everything else back to the same. Okay, so this is how you create statement of cash flows and how you connect the finalized number in the statement of cash flows to the balance sheet through cash and equivalents. Well, cash and equivalent basically means cash.